Today, we dive deep into the seismic partnership between Palantir Technologies, Elon Musk's xAI, and TWWG Global. We'll break down the numbers, the drama, and the stakes behind Palantir's meteoric rise, and why this could be the most important tech story of the decade. But before you blink, ask yourself, are you ready to witness the next trillion-dollar giant being born? Because what's coming isn't just another earnings report. It's the blueprint for the future of AI, finance, and power itself. Palantir, the shadowy software titan known for powering everything from military intelligence to pandemic response, has just inked a deal with two juggernauts, Elon Musk's xAI and TWWG Global. Why does this matter? Because together they're targeting the heart of the American economy, the regional banks that serve Main Street, not just Wall Street. xAI brings Grok, a large language model trained on the fire hose of data from X, formerly Twitter, and the kind of compute muscle only Musk can marshal. TWWG Global adds deep expertise in banking analytics and AI investments. Palantir fuses it all together with its AIP and Foundry platforms, the same tools trusted by governments and Fortune 500s. Their mission to drag regional banking into the AI era, solving regulatory headaches, slashing costs, and automating operations at a scale never seen before. Picture this. A small-town bank, once drowning in paperwork and compliance, now runs like a Silicon Valley unicorn. Regulatory filings, automated, fraud detection, AI-driven and real-time, customer service, personalized by Grok, learning from millions of interactions. This isn't just about efficiency, it's about survival. In a world where megabanks threaten to swallow the little guys, this partnership levels the playing field. But here's the twist. If they pull this off, Palantir won't just dominate banking. They'll have the blueprint to conquer healthcare, energy, even aviation. The stakes? Nothing less than the architecture of every regulated industry on Earth. Let's talk numbers, because the market is already in a frenzy. Palantir's first quarter of 2025 revenues, a record-shattering $884 million, up 39% year over year. U.S. commercial revenue, $4 billion, a 71% leap. Customer count, up 65% year over year. Net dollar retention, 124%, meaning existing clients are spending a quarter more than last year. Government contracts, up 45%. And the Rule of 40, a metric that separates pretenders from legends in the software world, Palantir scores an unbelievable 83. For context, Adobe sits at 51, Salesforce around 40. Most companies can grow fast or be profitable. Almost none can do both. Palantir is breaking the rules. GAAP operating margin, 20%. Adjusted operating margin, 44%. This isn't just good, it's historic. It means Palantir is scaling up without sacrificing quality or burning cash. They're not just growing, they're compounding. But with every meteoric rise, there's a shadow. The higher you climb, the further you can fall. Palantir's stock has exploded, up 55% in a single month, now trading at $120 per share. Investors are euphoric. But some analysts whisper, priced to perfection. What does that mean? Every ounce of good news is already baked in. One misstep, one market shock, and the correction could be brutal. In fact, the stock recently plunged 40% in a matter of weeks before roaring back. So what's the play? New investors, move slowly, dollar cost average, keep cash on hand. Long-term holders, take some profits, de-risk your position. Even the analyst who's been bullish for 5 years just cashed out a quarter of their stake after an 8 times gain. This is the paradox of success. The brighter the spotlight, the sharper the scrutiny. But here's the revelation. This isn't just about Palantir or even about banking. It's about a new model for tech dominance. Build platforms that make clients more successful. Embed yourself so deeply that your software becomes mission critical. Use high-profile partnerships to validate your approach and then replicate it across every industry that matters. This is the downstream of value creation model. Palantir isn't just selling software, it's selling transformation. Remember NVIDIA? Once a niche chipmaker, now a trillion-dollar titan. Some analysts believe Palantir could be next if it keeps executing at this level. The XAI partnership is just the beginning. Success in banking could open the floodgates to healthcare, energy, government, and beyond. But the road is perilous. High valuations invite volatility. The next few quarters will test whether Palantir can turn promise into permanence. So, what's the takeaway? Palantir's partnership with XAI and TWWG Global is a moonshot one that could redefine not just banking, but the entire landscape of regulated industries. The company's financials are best in class, combining explosive growth with real profitability. The stock is hot, maybe too hot, demanding discipline from investors. The blueprint is clear. If Palantir can replicate this model, it could become the next tech superpower. But in this new era, nothing is guaranteed. The only certainty, the game has changed. The players are bigger, the stakes are higher, and the next chapter is being written right now. So, will Palantir become the next trillion-dollar legend, or will it stumble under the weight of its own ambition? Stay tuned, because in the world of tech, the only constant is disruption.